Welcome to this week's On the Spot. I'm Tony Mulvey, joined by Thomas Boston. Thomas, how are you?
Doing well. Exciting stuff coming on. What do we have today on the spot, sir?
Yeah, so we've talked, the headline said it, the J.B. Hunt's earnings, they were really good, but then you kind of listen into the earnings call and kind of hear what's going on. It came out in the day, I've wrote it in the Daily Watch too. Shelley Simpson, new president of J.B. Hunt, said, we've seen a more seasonal July. So kind of looking at what does that mean to the freight market, right? Because she mentioned the past 2 years with the pandemic have been really hard to kind of judge and manage and predict anything that's happening. Now you're seeing some seasonality in the market. What's that mean? Just off the top, what do you think, when you hear we're seeing a seasonal July, what do you think that means?
Well, for the past 2 years, it was either all gas or no brakes or all brakes. And so seasonality is when we're seeing coming up the 4th of July, hot dogs, hamburgers, activity. And then coming off of it, we go into the summer doldrums. We see a little bit of a dip. We see a chilling out, so to speak, a sugar crash in the markets. And so seeing her comments on that seasonality, it really makes me feel that way. We're finally starting to see something instead of all up or was all down a few years prior.
Yeah, and we'll bring up a chart, and it'll be our outbound tender volume index, and it'll be on this seasonal chart, and we'll look back. So in the white line, you'll see 2022, I guess it's the blue line, you'll see 2021. That orange line will be 2020, and then you've got 2018 and 2019 there in the pink and the yellow. What you really typically see in July is tender volumes start the month at their highest level, and they decline throughout. 2020 really broke that trend. Even 2021, you saw kind of this same trend, but they were at such high levels that it kind of was masked that there was really any slowdown. But guess what? We're kind of on this trend, so it kind of goes with what she's saying, but we're right in the middle of where we were, say, in 2019 volume-wise, and where we were in 2021.
Exactly. And I think that's what her comments are really especially interesting, because J.B. Hunt has, you think a regular trucking pure play over one way, they call it one way or dedicated. J.B. Hunt, nearly half their stuff come from intermodal and other forms. So it's almost like when you get this big as a trucking company, you want to become more than a trucking company, and we're starting to see the byproduct of that.
Yeah, they're the beneficiary of the market conditions, right? This shift, this modal shift in trying to take some of this cost advantage that intermodal plays, and they're the largest domestic intermodal player that there is, and it shows in the results, right? You start to see where their volumes are growing. They grew on the intermodal side, but you look at their truck business, which is their one way, and you look at their brokerage, both volumes in the second quarter were down 3% year over year. Now, granted, it's not a big decline, but it's a decline during a quarter that everybody's kind of said, things are still good. Well, now you're seeing maybe they're not as good as they were in 2021. They are on the decline. And guess what? This is just the beginning. And I think that's the key, is you start to see what we look at, again, OTVI and what it does August and September. Fourth quarter always kind of happens. It's happened in 2019. You saw an increase in volumes. It's normal, right?
Yeah.
But it's this in-between period between the 4th of July and the start of that fourth quarter that are really kind of telling of what's coming down the pipeline.
And this is going to be something to watch, like you said, because are we in for the summer doldrums? Are we going to start running out of steam? Is the consumer strong enough to keep us going? Because the warning signs with the 3% lower volumes, that's we're starting to see it. And we've seen it in our volumes, but a lot of the analysts and stuff, the narrative been everything is awesome, And so I'm very curious, because that's why contract rates are so high. And that's going to have a very meaningful impact on not only J.B. Hunt's business, but other large trucking carriers coming into that Q4 and second half.
Yeah, and we'll bring up another chart. It'll be our outbound tender rejection over the same kind of looking seasonally what happens, right? We're seeing a seasonal July. Well, July is a softer month. You see rejections go down, kind of on that same trend line. Guess what? Rates kind of follow that, and we'll bring that one up too. And we've got our NTI, granted, it only goes back to 2019, it doesn't include 2018, but July, kind of a slower month. And guess what? Brad Hicks, president of Highway Services for J.B. Hunt, said in their earnings call when asked about highway published prices, so contract prices, safe to anticipate that there would be some flat to downward pressure, at least in the shorter term. Well, guess what? We've seen spot rates decline. Spot rates lead contract rates lower. we're starting to see signs that maybe contract rates are going to turn over here in the third quarter.
Definitely. I mean, that's going to be a strategy that most of these shippers are going to do. You're going to wait to drop the hammer. The problem is, when do we drop the hammer? Because we're scared, we're worried about fourth quarter. What if we drop the hammer too much and then it becomes too much volume? As we start to see this, we'll see the dominoes fall. We'll start seeing rate reductions probably from these large general merchandise because they have way too much inventory and they got to cut cost. Eventually, we'll start seeing it trickle down to folks who have higher turn rates because they're going to lock in the capacity because they're still using the capacity. So, I mean, seeing the brokerages take the hit first, asset light is always the first to get the Dear John letter. Yeah. Eventually, after you do that, you start trickling down and Dear John goes to Dear everybody else.
Yeah, I mean, now granted, brokerages have the benefit, right? They can try to keep contract prices up, drive spot rates down. Guess what? It's good for their margins. But in the long run, everything's going to start to slow down and you're going to see contract rates. And I talked to Emerge yesterday with Luke with Sonar, and it's like, you're going to see these shorter kind of bid cycles just to have some flexibility away from that annual RFP. Guess what? A lot of this technology that's been built over the past few years is really starting to mature. And now you're in a situation where it can come to light and actually be used to benefit both shippers. And ultimately, it's going to benefit everybody as it gets used, but shippers will be the ones that see it really here in the near term.
And when volumes decline as a large carrier, what are you going to do? Say no? Or you lose the volume, you can't get it back. So you're kind of stuck between a rock and a hard place, and now we're going to see the revenge of the shipper almost, if it was like a sequel.
Awesome. Well, thank you so much for joining me, Thomas, on this week's On the Spot. Right now, we'll take a quick break, but we'll be back with more Freight Waves Now.